All right, ladies and gentlemen, I hope you had a wonderful weekend. Welcome to December. We are kicking off the final month of the year with a bang. Not only do we have a bunch of data this week, we're also going to hear from Jerome Powell. And now it is the end of the year, but we got to start talking about next year, quarter two, and what we are getting ready for. All the political plays are pretty much in motion for the end of the month, but now they're going to have a lot more waiting as they finalize the moves into the end of the year and people start getting positioned. So we got a lot of things to cover. I got the plays, the recap, all that good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, before we get into the keys, we could take inventory of where we were at. Literally on Black Friday, the market just rallied. I was not there on stream, but you hit a new all-time high and everything was looking good. We were talking about getting ready for this week because now we are going to get a lot of data. Now, before we talk about that, though, I do want to cover all of the pretty pictures here since it's Sunday. So this chart here, I think you should save this and screenshot it. It will help you over the next coming months, but you could get an idea of some of the main trade ideas moving forward. At least for Bank of America, this is a summary of their views on the U.S., Euro area, China, rest of the emerging markets. You could see what is implied, again, this dollar dominance, U.S. exceptionalism. This is what we've been talking about ever since Trump has won the Trump trade and leading to a strong dollar and a lot of other impacts, and then that's created a bunch of different plays. This is how you could pretty much summarize it. And again, they're even talking higher for longer, but this is a very important chart. I think you guys should pay attention to this one. And then to give you more context to that U.S. exceptionalism, literally just in the last couple of weeks, you are watching money pour into the United States, and even compared to the rest of the world, Europe, Japan, emerging markets, it is not the same. That's why a lot of the U.S. companies, and it's not just Mag 7, it's been everything and a lot of things that have been benefiting off the strong dollar, they have been absolutely surging. Now, even over the weekend, we heard news from Donald Trump about tariffs on the BRICS, and there's even another headline with Donald Trump and tariffs and another appointment, so we're going to watch how that plays in, but surprisingly, that's not going to be the main impact this week. It'll be mostly about the data, but understanding everything in a broader sense. This strong dollar trade and money pouring to the United States, this has been very important. And even as we enter to the last month, this is why the data this week is going to be so important, because it is going to influence our December rate cut decision. And guess what? Right now, to wrap up this year with only 1 month left, I think you're ranking in the fourth largest amount of cuts in the last 25 years as a global whole in terms of rate cuts. So this is also one of the major themes that we're dealing with. So thought I would start off with some pretty pictures. There was another one I posted on my Twitter. You guys could see it there. But let's get into the keys now, because I'm going to be speaking pretty broadly here. Again, I want you to understand some of the main themes, and as we're getting into the end of the year right now, the year isn't over, but I want you to realize if you are not focusing on anything in the short term, everybody on Wall Street is getting ready now for next year. And there's a couple of things that we got to deal with. And if you want to know the timeline, we wrap up this year. We're going to deal with this overshoot. If you see everybody getting hyped up and we're waiting until the inauguration, things will level out. You're also going to hear more and more about policy and appointments. And then shortly thereafter, before you know it, you're going to be second quarter 2025 or even getting into the middle of the year or summer. But by spring, second quarter, people are going to be looking to see if Powell turns hawkish. And then by that moment, you're going to have an opportunity for the rest of the world, Europe, emerging markets, China, Japan. They can all respond to whatever Trump is about to put in place. So yes, we have to deal with the end of the year. I think this next couple of weeks is going to be action-packed even this week, but don't forget, you got to start looking ahead. Inauguration, hear the policy, whatever gets announced, and then even a little bit after the inauguration, we're going to meander. But before you know it now, we have to see the actual effect of things. Does it impact the Fed? Does it impact Powell? Does it impact the data? How do the other countries respond? And from there, a lot of different trades should start to develop, whether it's the Russell keep going, the dollar, whether it's China underperformance. This will all be dependent, again, by second quarter next year or summer. We're going to have a much different picture and be able to confirm a lot of this hype that we're getting for now. But pretty much it's animal spirits and hype until the inauguration. And then from there, we start getting ready. So this is going to be a wild week, and we're even going to talk about it. But as far as the data, you are going to be getting the PMIs on Tuesday. So tomorrow, there's going to be a couple of things, but really, you're going to start getting things that could move the bonds by Tuesday, and that's going to start changing the narrative. And then on Wednesday, there's a DealBook summit, and it's featuring a bunch of people. Jerome Powell is going to be speaking, Jeff Bezos, Sam Altman. So you're going to get a lot of headlines from there. And then by Friday, after we get the data and even Powell and we see where things are going, and to start off even this month, you end this week with the non-farms, and that'll be your last non-farms ahead of Powell in about, 2.5 weeks, December 18th. So that's what I'm saying here about this data is live, because now we are getting the final sets of data for the final Fed meeting of the year, and then this whole debate about are they going to be holding or cutting for December and those rate cut odds. Remember that. We talked about it briefly. Other things have kind of taken the focus, but that is fully going to come into play as we start getting this data. So that should be a lot to deal with. It is definitely going to drive us, and this is kind of what I was referencing earlier, what we're going to be moving forward with. All of the same narratives are in place. It's pretty much just going to be a more heightened version of last month. We had the election, you had the tailwinds, and everybody getting set up. I don't think any of the broader plays are going to change, but now the data will be more meaningful. It's the end of the year. We're going to see how people respond and really get an idea, and then start getting closer to the shift there. But you should get a little bit more excitement and volatility. Less headlines till the end of the month. But now the final thing is just going to be whether or not this data by the end of these next 2 weeks, does it change any of the story? And if not, then you coast all the way down to the election, and then we do got to watch the rest of the world. This is what I was mentioning earlier. We're going to have a heightened environment, but keep a lookout. By middle of December, we're going to be on the lookout for Japan. Whatever China does to tariffs, EUs, and any of those headlines, that could move things with the dollar, and that could either accelerate or decelerate some of the trades that we've seen. But all in all, get ready to wrap up this year. I think last month was a good template. There's great seasonality, but before you know it now, people are getting ready for next month, and you want to ask yourself, where is Powell, the market, and everybody feeling by spring of 2025? So I hope you're ready, but now let us get into the plays. So right off the bat, I got a couple of different plays, and I made two different versions. I did make another play related to China, but WYNN. So there is going to be China numbers, I think, tonight or tomorrow. You're going to be getting Macau gambling numbers. That could affect WYNN, Las Vegas Sands, any of those companies. But I'm looking at WYNN as related to the dollar, U.S., as well as China on the rebound. But now I may be very early on this. So I made a play on KWeb, but I think Bank of America, Michael Hartnett, the way they're looking at it, they say you buy China to hedge the Mag 7. So if the Mag 7 ends up underperforming, they think China will rip. Or the other theory is that pretty much later spring, around even May, that's when they're expecting China to pick up the slack as a response to everything that Trump has already done. So China plays maybe early. I grabbed Baidu for the long term. I grabbed a KWeb on Friday. I think there's going to be a lot of opportunity, not only end of the year on China, but even into next year. I'm a real big fan. I was big fan on it last year, so now even more so. We will see what happens with the tariffs. I did talk about it, so I guess I can mention this in here. I do think the tariffs, China could handle a lot, but if you actually do go look at currencies, right now the dollar has moved a lot, but other things, other currencies, especially like China, they're not moving the same way, especially compared to what they did in 2018, and it's kind of implying that the full-on trade war isn't as priced in or people aren't thinking this time the trade war will be as devastating as 2018. So there's going to be a lot of opportunity there, but all in all, I'm going to be watching China. I think there's going to be a lot of opportunity there, and I think WYNN kind of gets the best of both worlds. And remember, they just had that activist stuff, but I thought that was foo-foo, but we'll find out how that plays. That is play number 1. Then play number 2, my friends, TLT. This did very good last week, and now people are kind of getting on board, and here it is, man. The long rates are not going to go above 5%, and the way I'm looking at it is very simple, and I think Michael Hartnett, he agrees the same way. If you want to get this rally next year, if 2 years in a row of 20%, usually the next year is really good, but the only way we get a very good year on stocks is if the bonds don't go above 5%. So I have the same thesis with TLT, and I've been telling you guys this. It was at 4 or 5, and then I got a little spooked, and I said, okay, I'll move it to 5, but 5% is that all-in percent. Pretty much now till the end of the year. Obviously, if we do get 5-6% inflation, this idea blows up, but it's already looking like we did do 4 or 5. You kind of held that, and now we're bouncing, but the way people are looking at it is that unless inflation really goes bad, like Trump would have to be very dumb, and maybe you agree with that, maybe you agree, I don't know, but you would really have to have some things go wrong for inflation to really start skyrocketing. If it does, this idea goes to poo-poo, but in the meantime, if they control things, don't let the bonds go crazy, this is how you set up a massive rally with everything else. So yeah, it's about TLT, but in the broader scope of things, as long as bonds stay stable in 2025, as history and like 1996 has shown us, and other times where you've had massive years, as long as the bonds stabilize, then we don't have a problem. But if they do, then we'll probably be talking about some other things. But I think for now, TLT, it's already at 4 or 5. I think between 4 or 5 and 4%, that's going to be a good range to dance around until we hear from the Fed, or maybe the Fed contributes or takes away from this, depending on what they say at the Fed meeting. But watch out for that. And again, understand bonds, long rates, 5%, what it means for the rally. There's some good history behind this. So that's play number 2. And then finally, play number 3, KRE, BITO, ARK. Like I'm saying, this week, probably going to be a heightened version of what we saw last month. A lot of these political trades developing. You're going to get more headlines and tailwinds back and forth depending on what gets announced. So a lot of these Trump trades might be good. So if you remember, we made a move on all of these. And believe it or not, remember, I sold all of these and I moved it to TLT when TLT was low. That ended up working out, and I wanted to double check that. And that's what I'm saying here. Every single one of these plays is lower. I did do a double dip on Citi instead of KRE. That play is still down. And then I grabbed another ARK. Those are still down. But when I moved all that money, all of these plays, they have dropped from that hype. So maybe if we get an exciting week here, if these start to really develop and we notice the same things of the Trump trade, we could snag all of these for cheaper. And maybe this is the double dip opportunity. The TLTs are already up like 50%. So now these are going to start leveling out. There could be an opportunity. So I am going to be watching that this week. But that is play number 3. As far as everything else, on Friday, I was sleeping, so I did not stream, so I made no plays, but the TLTs ran, so that was good. On Thursday or Wednesday, we did a VSH play. There was like a headline there, made it free, 22.5 call, 15. It's like at 30. We got 500% on the Dell. I forgot to sell out before close, so that ended up working out. We got to make 100% total, and then the contract itself went 500 because I spent 300, 150 on the calls, 150 on the puts, walked away with $600, so not bad. And then on Friday or Wednesday, what am I saying? The same day, K-Web, it was the end of the week. It was weird. I grabbed K-Web, so I think I might be early, but I did grab time, or maybe I just need to go further out, but I think this one will be like the TLT. If you guys remember, I went with a couple TLTs. They ended up doing good, but we had to work our way in to get a good play, so this will be my first purchase. Spent about $300, 56 calls. I grabbed 20 of them at 15 cents a pop. I think the 52s were for like 20 cents or ended up going for the same price. So if you could get closer to the money, that would be a better play. You should get my rebound. You should do a lot better there. If you ever see anything if you like one of these plays and you wait till I go down, always a great strategy. In this case, if you could get closer to the money, the idea there is just, again, Chinese hedge or Chinese rebound. I think there's going to be an opportunity. And then the short-term TLTs, I should have held them. They would have went up a lot more. They ended up going in the money. Remember, we went for those 93s. That was one of those TLT plays. They went up 50%. I sold out of them on Wednesday, so I'm still in the marches. One of the marches are like break even, and the other march is the big one where we moved all of the profits from like KRE, BITO, where was that? all of those, that play ended up going up 50%, so I'm going to get ready to make them free. But I said I wanted to sell some of the rips. Remember, I was getting kind of spooked, so that's where that play comes in. But other than that, I think we're going to have an exciting week of bond back and forth and maybe the dollar and a lot of things. And before you know it, you'll probably start hearing about Japan and a couple more. But in the meantime, welcome to December. Let's see what the market has in store. And I hope you're already ready for the future, baby. Start preparing and save that 10%. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, take heart, baby. Oh, yeah, there's a spirit that it's bigger than you, bro. Yeah, you got something bigger. You got an aura, bro. Not like aura like TikTok. No, I don't think. Energy, baby. Let's go. It's already a new year. You're ready, baby. Chad, drink that water. Stay hydrated, healthy, all that good stuff. I love you. I'll see you in the morning. And horn.